Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, gold yields and trucking are spelling disaster. What we're talking about, we're going to discuss in this video. Not going to want to miss it. Let's dive in.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob. So 3 random things here: gold yields and trucking. Take us through what all of that means for us going forward here as we kind of wrap up 2023 heading into 2024.
Yeah, I mean, a lot of people look at the unemployment report as like the gospel, but really it's trucking and rails that are where you always have to look, because that's the point of the spear. And if you see here, trucking employment is collapsing, Phil. And it's collapsing at a time where it actually should be in ascendance, because this is when all the goods are moved for the fourth quarter retail trade for the holidays. And if trucking's down going into the fourth quarter, that means people's inventories are collapsing and they're not expecting robust sales going into Q4, Christmas of 2023, which will be a disaster for retailers. It's just another indicator of, the strength of the economy right now. And we're talking today, Monday, we had another, basically a short squeeze, because war didn't break out or expand in Israel. And by the way, people, just FYI, it's raining a lot over in Israel right now, so they're probably holding off on the ground invasion for better weather. So at any point, we could see an escalation, but they popped it. But what's weird today is that the yields are up with the market being up,
right,
which just says to me this was just a short squeeze because of the VIX index. So the next chart I want to show is the gold chart. Really fascinating. So gold had a pretty good correction here, and that's the top line here. But what people don't know is that gold and yields are correlated, but they're offset by time. And so gold leads yields by 2 years. And so you have a situation here now where the correlation is such that in 2024, we should expect to see yields falling pretty hard. And that makes perfect sense, because we're going to be in an environment where the government's not going to be able to afford its policies that it is right now in terms of spending without interest expense starting to fall. And number 2 is that you're just going to have no economic activity. But short term, I think we're going to spike higher, Phil, because of the just the spending needs that Janet Yellen has. So there's going to be a game going on here, is that she's going to try to fill up the coffers again so that they're ready to play some games here with the election in 2024. But in the short term, they're going to spike yields. But in 2024, you're going to see yields fall. But you want to talk about this third chart here, because the volume is telling us that TLT may be having another leg down, which kind of ties into what I just said. You want to talk about that?
Yeah, it does tie into what you just said, because the prediction here is that yields are going to spike pretty hard, and I think it's going to continue to normalize the 210 yield curve and the 3-month 10-year yield curve, which is extremely bearish for the markets. If we go and look at, now this is just a TLT positioning chart. These are basically the 3 largest trades, and they're quite high in ranking. So in terms of like all the trades that have ever traded on TLT, you had the second biggest trade ever on the lows there right around 86. Then you had a 15th ranked trade at around 88.50, and then a 47th ranked trade around 87.50. These are huge dollar amounts, guys, hundreds and hundreds of millions of dollars. Now, what's interesting about this is it's happening in this range of basically 86 to 88.50, and we're pressing down now on TLT to the lower end of this range. So what I'm going to to say, Bob, here is that likely due to the institutional orders that have been placed in here, if we start cracking under 86, because you don't ever really know the direction of those trades, you just know that they took place. I'm going to say that there's probably distribution there, even though we're at the bottom end of a move. You just don't want to fight. You got a bunch of trades that happen in a range and we lose that range. They're likely selling off in that range. And that last bubble there, that 47 bubble at 87.50 may have been where they took another selling or short position and we could be pushing down. Then you have to zoom out to that weekly chart and those levels we talked about last week where, we could probe down below 85 on TLT potentially. Now, I don't think, and I think you're in the same boat that that's the death of TLT and bonds. I think that you have an opportunity at some point. We're going to get that recession trade and we're going to start seeing, I think we're already seeing some positioning and legging into it, but a lot of these institutions, what we've been seeing lately is they're taking more of a short-term approach. So they're doing big size and they're willing to capture a $2 move. So they might be seeing another move down to say 84 on TLT or lower. They're willing to take that small trade. And then I think what we'll see is a basing action similar to what you see in this chart here, where you got a range, but you're going to see a ton more of these big orders that are going to form a range, and then you're going to see TLT come flying out of that. And I think that's where, in my opinion, we'll probably see TLT up, equities down, and then we're probably in that final 8 to 12 month window of that bear market, Bob. That's what this is telling me at this point.
Yeah, look, and I think a lot of pension funds look for 8% return every year. And so if they get yields anywhere close to that, and they can lock in and take advantage of a capital appreciation with yields falling, Phil, it's going to be, they're just going to race over to the bond market. And I think that's what everybody's looking for. They're looking for that big push to spike up. Even that gold chart shows that we have one big spike up left, and then the whole thing comes crashing down. So This whole thing about them being able to keep this flat at a high level for longer is just another narrative, is another, disinformation campaign to get you wrong-footed on this. You should be legging in slowly into long bonds, and you should be legging out of equities. It's in a year from now, you're going to be thanking us.
Yeah, and then look at this little live chart here of the U.S. 30-year yields, right? You're in an uptrend on yields. And even today, yields are up and they've been up for the last couple of days. This is a 4-hour chart and equities are bucking the trend. I think that's just a momentary divergence. But ultimately, I think we start cracking over this red line here, about 4.9%. We're going to get back over this resistance and we're going to get another leg higher on yields. And I don't care. ES can have a half a day of fighting this, but ultimately you zoom out, ES is going to get, when I say ES, I mean the S&P 500 futures, but S&P 500, the stock market is going to take a hit on this move up. And I think it's brewing here. It's about ready to break out on yields.
Yeah, we have a Wednesday, I guess the bond auction comes back again. These are bonds, these aren't bills.
Right.
So whatever, these guys are trying to lift the market, give themselves runway to get out again because they have to take their collateral. They're required to buy these bonds.
Right.
Okay. And that means they have to take money out of other speculative trades to buy these bonds. Eventually, Janet Yellen's going to force the banks to put all their collateral, all their assets into these treasury bonds because they're required to by law.
Right.
And so it's going to be, the longer this goes, the uglier it's going to get, and it's going to cause some sharp corrections in the market.
Right. And so again, we have another bond auction. A 20-year bond auction is on Wednesday, October 18th, a couple days at 1 p.m. Eastern. So the last couple of bond auctions, the market did not react very well. In fact, very bearish reaction. So if we have another, they're not really failed auctions, but as close as you're going to get to a failed U.S. Treasury auction. And if the Fed doesn't show up again and does a zero bid, I think you're going to see yields spike pretty hard in a negative reaction again, like we saw last week. So guys, hang in there. I think yields are going to be going higher. And it's an interesting situation because you can get into bonds. The face value of them may come down in the short term, but your yields are still cranking. So you can sit in those things for a while. And that's the beauty about those is you're not really losing money. You are if on paper, but most of this stuff is designed to hold to maturity. So if you're getting into like the 2, 3, 5 year bonds, you have a lot of time to play out here in collecting premium on the yield. And then you're going to be able to come out of that through the recession. And once that divergence happens, you're going to be looking like a genius, even though you may have technically gotten in a little early in terms of like what TLT is trading at. Because remember too, TLT has a dividend. So that's all I got, Bob.
Yeah, same here, guys. Thanks for listening and hit like, hit subscribe, check us out, and have a great day. We'll talk to you tomorrow.
Bye-bye.
Trade Genius.